Question 1. A company XYZ Corp is dealing with a ransomware attack that has encrypted all of their business-critical data, halting operations and causing significant business interruption. The company has cyber insurance that includes coverage for cyber extortion. XYZ Corp is wondering whether the insurance policy will cover the ransom payment made to the attackers. Which of the following factors would be most relevant in determining whether the ransom payment will be covered? A. The presence of a cyber extortion rider in the policy. B. The amount of the ransom payment exceeding the policy limit. C. Whether XYZ Corp has implemented multi-factor authentication. D. The geographic location of the ransom payment request. Answer A. The presence of a cyber extortion rider in the policy. Explanation. The coverage for ransom payments under a cyber insurance policy typically falls under the cyber extortion coverage. This coverage is specifically designed to respond to situations where a company faces demands for ransom in exchange for the return of data or access to systems, as in the case of a ransomware attack. The other options, while relevant to overall cybersecurity posture, are not the direct determining factor in whether the ransom payment itself is covered. The presence of a cyber extortion rider in the policy would be the most crucial factor in determining coverage. Question 2. Which of the following is most likely to be excluded from coverage under a typical cyber insurance policy? A. Losses resulting from a data breach affecting personal customer information. B. Damages caused by a known vulnerability that was not patched. C. Legal defense costs incurred due to a lawsuit arising from a data breach. D. Business income loss resulting from a cyber attack. Answer B. Damages caused by a known vulnerability that was not patched. Explanation. Many cyber insurance policies include exclusions for known risks, including damages arising from vulnerabilities that were already identified but not addressed. This exclusion is in place because insurers typically expect policyholders to maintain basic security hygiene such as patching known vulnerabilities. The other options, losses from a data breach, legal defense costs, and business income loss, are generally covered, though they may depend on the specifics of the policy and whether the proper security measures were in place at the time of the breach. Question 3, scenario-based. Mr. Anderson, the IT security manager at a large retailer, has just learned that a significant breach of customer credit card information has occurred. The breach was caused by an advanced persistent threat and several hundred customer records have been compromised. Mr. Anderson must now decide on the next steps, including notifying the affected customers. What should Mr. Anderson do first? Given the legal requirements under Washington state law for data breach notifications, A. Immediately notify the affected customers via email to meet breach notification requirements. B. Contact the Washington office of the Insurance Commissioner OIC before notifying the affected customers. C. Notify the affected customers as soon as possible and within 45 days as required by Washington state law. D. Wait until the company has determined the full scope of the breach before notifying affected customers. Answer. C. Notify the affected customers as soon as possible and within 45 days as required by Washington state law. Explanation. Under Washington state's data breach notification law, businesses are required to notify affected customers as soon as possible after discovering a data breach. The law mandates that this notification must be made no later than 45 days after the breach is discovered. It is not required to wait until the full scope of the breach is determined, as immediate notification is crucial for the protection of affected individuals. Contacting the Washington OIC is not a mandatory first step, and notifying the customers via email is allowed as long as it meets the statutory timeline. Question 4. A cyber insurance policy includes coverage for both first-party and third-party claims. A company suffers a data breach involving unauthorized access to its internal systems, resulting in the exposure of personal information. The company incurs costs related to the breach, including data recovery, legal fees, and public relations efforts. The company also faces a lawsuit from affected customers. Which of the following costs is most likely covered under the first-party coverage of the policy? A. Legal defense costs related to the lawsuit from affected customers. B. Data recovery and notification costs. C. Damages awarded to affected customers in the lawsuit. D. Business interruption costs resulting from the breach. Answer. B. Data recovery and notification costs. Explanation. First-party coverage typically covers costs incurred by the insured organization itself due to a cyber incident. This would include data recovery, notification costs, crisis management, and business interruption losses. Legal defense costs related to a third-party lawsuit and damages awarded to affected customers are typically covered under third-party liability coverage. Business interruption coverage may fall under first-party coverage but would depend on the specific policy terms. Question 5. Which of the following is a key characteristic of the NIST Cybersecurity Framework (CSF) in the context of cyber insurance? A. It is a regulatory standard that mandates cybersecurity requirements for insurance companies. B. It is a flexible voluntary framework used to improve an organization's cybersecurity posture. C. It is exclusively for use by financial institutions in the context of cybersecurity. D. It is only applicable to organizations in the United States. Answer. B. It is a flexible voluntary framework used to improve an organization's cybersecurity posture. Explanation. The NIST Cybersecurity Framework (CSF) is a voluntary, flexible, and widely adopted framework that helps organizations manage and reduce cybersecurity risk. It provides a set of guidelines for organizations to assess and improve their cybersecurity practices, but does not impose mandatory regulations. It is used across various industries, not just by financial institutions, and is applicable to organizations globally, even though it was originally developed by the National Institute of Standards and Technology (NIST) in the US. Question 6. Scenario-based. Mr. Thompson, the CEO of a mid-sized manufacturing company, has just received a ransomware demand. The attackers have encrypted sensitive company files and are demanding a large payment in cryptocurrency. Mr. Thompson has a cyber insurance policy with a cyber extortion coverage rider. However, the insurance company requires the company to take certain preventive measures to reduce the risk of future attacks before paying the ransom. What is the most appropriate action Mr. Thompson should take? A. Pay the ransom immediately and hope for the best, as the company's policy includes cyber extortion coverage. B. Contact the insurance company for guidance and follow their instructions before making the ransom payment. C. Ignore the insurance company's requirements and pay the ransom to minimize the downtime. D. Report the incident to the police before involving the insurance company. Answer. B. Contact the insurance company for guidance and follow their instructions before making the ransom payment. Explanation. It is crucial to follow the guidelines set by the insurance company before making a ransom payment. Many policies include clauses that require policyholders to cooperate with the insurer's instructions and may mandate specific steps, such as involving forensic experts or working with law enforcement before any payment is made. Paying the ransom without insurance company approval may risk forfeiting coverage or other complications. Therefore, Mr. Thompson should first contact the insurance company for guidance and follow their procedures. Question 7. A company is seeking to purchase cyber insurance and has a history of several minor cyber incidents. The company has implemented some cybersecurity measures, including firewalls and antivirus software, but has not conducted a formal risk assessment. During the underwriting process, the insurer will most likely A. Offer coverage with standard premiums assuming the company's security measures are adequate. B. Require the company to undergo a formal risk assessment before issuing a policy. C. Deny coverage due to the company's history of minor cyber incidents. D. Offer coverage at a discounted premium due to the company's proactive measures. Answer. B. Require the company to undergo a formal risk assessment before issuing a policy. Explanation. Underwriters typically assess the cybersecurity posture of a company before issuing a policy, especially if there is a history of cyber incidents. A formal risk assessment is often required to identify vulnerabilities and determine the appropriate premium. In this case, the insurer is unlikely to simply offer coverage based on the company's security measures without understanding the full risk. A history of minor cyber incidents does not necessarily lead to coverage denial, but it will likely impact underwriting terms and premium costs. Question 8. Which of the following is the primary purpose of third-party liability coverage in a cyber insurance policy? A. To cover costs associated with a company's own internal system recovery after a cyber event. B. To cover damages and legal costs incurred by the policyholder in relation to a data breach affecting third parties. C. To cover costs associated with business interruption due to a cyber attack. D. To cover the cost of ransom payments made to attackers. Answer. B. To cover damages and legal costs incurred by the policyholder in relation to a data breach affecting third parties. Explanation. Third-party liability coverage in a cyber insurance policy is designed to cover legal and financial costs when a data breach or cyber incident impacts third parties. This includes legal fees, damages, and costs arising from lawsuits or claims filed by affected individuals or organizations. First-party coverage would address costs related to system recovery or business interruption, while ransom payments would be covered under a cyber extortion rider. Question 9. Under Washington state law, what is the maximum amount of time an organization has to notify affected individuals of a data breach involving personal data? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer: B. 45 days. Explanation: under Washington state law, businesses are required to notify affected individuals within 45 days after discovering a data breach involving personal data. This notification requirement ensures that individuals are informed as quickly as possible to take protective actions, such as monitoring their credit or changing passwords. The other options exceed the 45-day requirement set by Washington's data breach notification laws. Question 10. A company's cyber insurance policy includes a coverage limit of $1 million for first-party losses, but a sublimit of $250,000 for crisis management expenses. If the company incurs $300,000 in crisis management costs after a major data breach, which of the following statements is correct? A. The policy will cover the full $300,000 as it is below the overall coverage limit. B. The policy will cover only $250,000 for crisis management and the remaining $50,000 will be the company's responsibility. C. The policy will cover the entire $300,000 as it is within the first-party coverage limit. D. The policy will not cover any of the crisis management costs. Answer: B. The policy will cover only $250,000 for crisis management and the remaining $50,000 will be the company's responsibility. Explanation: when a sublimit is specified for a particular type of coverage, in this case crisis management expenses, the policyholder is only entitled to claim up to that sublimit amount. Although the overall first-party coverage limit is $1 million, the crisis management sublimit specifically caps coverage at $250,000 for crisis-related expenses. Therefore, the company would be responsible for any amount exceeding the sublimit, in this case, $50,000. Question 11. Which of the following is most likely to be covered under cyber insurance policies? A data breach coverage. A. Costs for improving a company's overall cybersecurity posture. B. Costs associated with a malware attack that affects an individual employee's device. C. Legal fees and notification costs for informing customers of a breach involving their personal data. D. Revenue lost due to a company's website being temporarily down. Answer: C. Legal fees and notification costs for informing customers of a breach involving their personal data. Explanation: data breach coverage in a cyber insurance policy typically covers the costs incurred when sensitive personal data is exposed. This includes legal fees, notification costs to affected individuals, credit monitoring services, and other related expenses. The other options pertain to other forms of cybersecurity coverage, such as business interruption or cyber extortion. Question 12. Which of the following is a common exclusion in most cyber insurance policies? A. Business interruption caused by a cyber attack. B. Costs of notifying customers after data breach. C. Losses due to intentional or criminal acts committed by employees. D. Costs associated with system recovery after a ransomware attack. Answer: C. Losses due to intentional or criminal acts committed by employees. Explanation: most cyber insurance policies contain exclusions for losses resulting from the intentional or criminal acts of the policyholder's employees. If an employee intentionally causes damage or participates in criminal activities such as data theft or sabotage, the insurance policy would typically exclude coverage for those losses. The other listed expenses are usually covered under standard cyber policies. Question 13. Scenario-based. ABC Corporation suffers a data breach where sensitive customer information is exposed. The company's cyber insurance policy has a $500,000 coverage limit for data breach-related expenses. The breach results in $200,000 in legal fees, $100,000 for credit monitoring services, and $50,000 for public relations efforts. How much of these costs will ABC Corporation's policy likely cover? A. $500,000. B. $350,000. C. $200,000. D. $100,000. Answer: B. $350,000. Explanation: a BC Corporation's policy will cover up to the $500,000 limit, but the costs need to be considered separately to see if they fall within the coverage. The total breach-related costs amount to $350,000, $200,000 in legal fees, $100,000 in credit monitoring services, and $50,000 for public relations. Since these costs total less than the coverage limit of $500,000, the policy will likely cover the full $350,000. Any remaining coverage can be used for other expenses up to the limit. Question 14. Which of the following actions would most likely help reduce the cost of cyber insurance premiums? A. Purchasing more cyber insurance coverage. B. Installing a strong company-wide password policy. C. Purchasing liability insurance in addition to cyber insurance. D. Expanding the company's internet usage for employees. Answer: B. Installing a strong company-wide password policy. Explanation: cyber insurance premiums are often low for companies that demonstrate a strong cybersecurity posture. Implementing proactive measures such as strong password policies, multi-factor authentication, and regular employee training can help reduce the risk of a cyber attack, making insurers more likely to offer favorable premium rates. The other actions listed may not directly influence the premiums in the same way. Question 15. Which of the following is true about the role of the forensic investigation coverage in a cyber insurance policy? A. It is designed to cover the costs of data recovery after a breach. B. It provides funding for experts to determine the cause of the breach and assess the impact. C. It covers the cost of paying a ransom to cyber criminals. D. It pays for legal fees related to defending the company in a lawsuit. Answer: B. It provides funding for experts to determine the cause of the breach and assess the impact. Explanation: forensic investigation coverage typically helps fund the costs of hiring experts to analyze the breach, determine how it occurred, and assess the full scope of the impact. This investigation is critical for understanding the origin of the breach and for meeting regulatory reporting requirements. Data recovery and legal defense costs would generally fall under different sections of the cyber insurance policy. Question 16. In which of the following scenarios would a company most likely file a claim under the cyber extortion coverage of its cyber insurance policy? A. A malware attack causes the company's systems to be unavailable for several hours. B. A hacker demands a ransom payment in exchange for a decryption key to restore access to encrypted files. C. An employee's laptop is lost, exposing sensitive customer information. D. The company is sued for negligence after a data breach affects customers. Answer: B. A hacker demands a ransom payment in exchange for a decryption key to restore access to encrypted files. Explanation: cyber extortion coverage is designed to address incidents where cybercriminals demand a ransom in exchange for restoring access to a company's data or systems, such as in ransomware attacks. This coverage can help cover the ransom payment and any associated costs. The other scenarios involve different types of coverage, such as business interruption or data breach. Question 17. Which of the following could be an outcome of a data breach that could trigger regulatory fines and penalties coverage in a cyber insurance policy? A. Customers sue the company for damages due to the breach. B. A government agency fines the company for failing to notify affected individuals within the required time frame. C. The company must pay a ransom to regain access to encrypted data. D. The company's website experiences prolonged downtime due to a cyber attack. Answer: B. A government agency fines the company for failing to notify affected individuals within the required time frame. Explanation: regulatory fines and penalties coverage is designed to cover the costs of fines imposed by regulatory bodies when a company fails to comply with data protection regulations, such as failing to notify affected individuals within the required time frame after a breach. The other options pertain to other types of coverage, such as liability or cyber extortion. Question 18. Scenario-based. XYZ Limited purchases a cyber insurance policy with a $1 million limit for first-party losses. The company suffers a ransomware attack and incurs the following expenses: ransom payment, $500,000 data recovery costs, $200,000 forensic investigation costs, $100,000. What is the total amount XYZ Limited can claim under the policy, assuming no other exclusions apply? A. $500,000. B. $700,000. C. $1 million. D. $800,000. Answer: C. $1 million. Explanation: in this scenario, XYZ Limited can claim up to the full $1 million coverage limit. The ransom payment, data recovery costs, and forensic investigation costs all fall under the first-party coverage. As long as these expenses are within the policy limit, XYZ Limited can claim the full amount. The total expenses add up to $800,000, which is below the $1 million limit. Question 19. Which of the following is typically included in a cyber insurance policy's business interruption coverage? A. Compensation for lost income due to a cyber attack that disrupts business operations. B. Legal fees associated with defending the company in a lawsuit. C. Costs related to regulatory investigations or fines. D. Ransom payments made to cyber criminals. Answer A. Compensation for lost income due to a cyber attack that disrupts business operations. Explanation: business interruption coverage is designed to compensate for lost income and additional expenses incurred as a result of a cyber attack or system disruption that affects normal business operations. This could include things like lost sales or revenue while the business is down. The other options pertain to different types of coverage, such as legal defense, regulatory fines, or cyber extortion. Question 20. A cyber insurance policy includes a data breach response coverage rider. Which of the following actions is most likely to be covered under this rider? A. Funding for the ransom payment to regain access to encrypted files. B. Legal fees for defending the company in a class action lawsuit. C. Public relations costs for managing the company's reputation after a breach. D. Damage to physical equipment caused by a cyber attack. Answer: C. Public relations costs for managing the company's reputation after a breach. Explanation: a data breach response coverage rider typically covers expenses incurred as part of the response to a data breach, such as legal fees, customer notification, credit monitoring services, and public relations efforts to repair the company's reputation. Ransom payments and damage to physical equipment are usually covered under separate parts of the cyber insurance policy. Question 21. Which of the following would most likely be excluded from a cyber insurance policy's coverage? A. Losses caused by a denial of service DOS attack. B. Financial losses due to an employee's negligence in protecting company data. C. Losses from a data breach involving customer information. D. Damage to a company's reputation after a cyber attack. Answer: B. Financial losses due to an employee's negligence in protecting company data. Explanation: most cyber insurance policies exclude losses resulting from the negligence or intentional actions of the policyholder's employees. If an employee fails to properly secure company data, it is typically considered negligence, which may not be covered under the policy. The other options are generally covered under most policies, especially if they involve external threats or breaches. Question 22. Which of the following best describes the purpose of network security coverage in a cyber insurance policy? A. It covers the costs of recovering lost or corrupted data. B. It provides protection against cyber attacks that breach a company's network. C. It covers the costs of paying a ransom to cyber criminals. D. It covers the cost of reputation management services after a data breach. Answer: B. It provides protection against cyber attacks that breach a company's network. Explanation: network security coverage in a cyber insurance policy is intended to cover costs arising from cyber attacks that breach a company's network. This may include costs for restoring data, responding to a data breach, and other related expenses. The other options are related to different types of coverage, such as data recovery or cyber extortion. Question 23. Scenario-based. The e-commerce company's website is targeted by hackers who steal customer payment data and cause a temporary disruption of the website. The company has a cyber insurance policy with $500,000 coverage for business interruption. The company's revenue loss during the downtime is estimated at $100,000. How much will the business interruption coverage pay for? A. $500,000. B. $100,000. C. $0, as the coverage only applies to physical losses. D. The full amount of revenue lost. Answer: B. $100,000. Explanation: business interruption coverage under a cyber insurance policy typically covers lost income due to a cyber attack that disrupts operations. Since the company's estimated revenue loss is $100,000 and the coverage limit is $500,000, the insurance will cover the full $100,000, but no more. The $500,000 limit is only relevant if the business interruption exceeds the actual revenue loss. Question 24. Which of the following actions would not likely reduce the risk of a cyber attack? A. Installing a firewall to monitor and control network traffic. B. Regularly updating software and security patches. C. Training employees on how to recognize phishing attacks. D. Keeping sensitive information in an easily accessible, unprotected online file. Answer D. Keeping sensitive information in an easily accessible, unprotected online file. Explanation. Storing sensitive information in an easily accessible, unprotected file increases the risk of a cyber attack. Cyber criminals may exploit unsecured files, making them a target for data breaches. The other actions, such as installing firewalls, updating software, and educating employees, all help reduce cyber risks. Question 25. What is social engineering in the context of cyber insurance? A. Using encryption to secure data during transmission. B. Using manipulation or deception to trick individuals into revealing confidential information. C. The process of designing and deploying cybersecurity defenses. D. The analysis of large datasets to identify potential security threats. Answer. B. Using manipulation or deception to trick individuals into revealing confidential information. Explanation. Social engineering is a method used by cyber criminals to manipulate individuals into divulging confidential information or performing actions that compromise security. This can include tactics such as phishing emails or pre-texting. Social engineering attacks are often covered by cyber insurance policies under data breach or fraud coverage. Question 26. Scenario-based. A company receives a ransomware attack that encrypts its critical data. The attackers demand $100,000 in ransom, but the company has a cyber insurance policy with a $50,000 coverage limit for cyber extortion. The company decides to pay the ransom to recover its data. How much will the insurance policy cover? A. $100,000. B. $50,000. C. $150,000. D. $0 as ransomware payments are excluded. Answer. B. $50,000. Explanation. Cyber extortion coverage typically covers the costs of paying a ransom in the event of a cyber attack, but only up to the policy's coverage limit. In this case, the policy has a $50,000 limit for cyber extortion, so that is the maximum amount that will be covered even though the ransom demand is $100,000. Question 27. Which of the following is the most critical factor for determining the cost of a cyber insurance premium? A. The number of employees in the company. B. The industry in which the company operates. C. The company's cybersecurity posture and risk management practices. D. The company's annual revenue. Answer. C. The company's cybersecurity posture and risk management practices. Explanation. The most significant factor influencing the cost of a cyber insurance premium is a company's cybersecurity posture, including its risk management practices. Insurance providers evaluate the steps a company takes to protect its data and systems, such as the use of encryption, firewalls, employee training, and other security measures to determine premium costs. Question 20. A company's cyber insurance policy includes coverage for reputation management. After a cyber attack, what would be covered under this type of coverage? A. The costs of investigating the cause of the cyber attack. B. The legal costs of defending the company in a lawsuit. C. The cost of hiring a public relations firm to mitigate the damage to the company's reputation. D. The cost of recovering lost data after a cyber attack. Answer. C. The cost of hiring a public relations firm to mitigate the damage to the company's reputation. Explanation. Reputation management coverage is designed to cover the costs associated with managing a company's reputation after a cyber attack, such as hiring a public relations firm to address negative media attention or customer concerns. The other options would be covered under different parts of the cyber insurance policy, such as data recovery or legal defense coverage. Question 29. What does a retroactive date cyber insurance policy refer to? A. The date when a company first purchases cyber insurance. B. The date after which cyber incidents are covered by the policy. C. The date when the insurer will no longer cover claims. D. The date when a cyber attack is first detected. Answer. B. The date after which cyber incidents are covered by the policy. Explanation. The retroactive date in a cyber insurance policy refers to the date after which incidents are covered Any cyber incidents occurring before this date are typically not covered by the policy. It ensures that only incidents that happen after a certain time are eligible for claims, providing clarity on coverage for past events. Question 30. Which of the following is typically covered under cyber insurance policies? Data loss coverage. A loss of business income due to a cyber attack. B. Costs associated with customer notification after a breach. C. The physical destruction of hardware during a cyber attack. D. Loss of or damage to digital data, including files, documents, and records. Answer: D. Loss of or damage to digital data, including files, documents, and records. Explanation: data loss coverage typically protects against the loss or damage of digital data during a cyber attack, such as the destruction or corruption of important files, records, or databases. The other options fall under different coverages, such as business interruption, data breach response, or hardware damage.